SoFi reported earnings before the market opened on Tuesday, and there was a ton to like from the company. Increased guidance, the member growth is absolutely phenomenal. Not a huge reaction from the market, as you can see here. Shares are up a couple of percentage points. They're actually down early in trading today. But as a long-term investor, an investor in SoFi, I think this is the kind of quarter that we want to see. We're seeing momentum in all the right places. And really the thing is, SoFi is becoming more of a tech company than it is just a bank. Yes, it's leaning on the fact that it is a bank and it owns a bank, but the risks are very different than a bank and the growth rate is very different than a bank. A typical bank can't grow its revenue at 20, 30% per quarter because they're limited by their balance sheet. They need to use that balance sheet to distribute loans and then just make a small percentage on each of those loans above its cost of capital. SoFi is growing faster than that because it's becoming much more of a fee-based business. So let's dig into exactly what we learned this quarter, where the stock's going to go from here. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. I'm going to actually go straight into their slides today because I think this is what is most important, is the number of members that they have. 12.6 million members on the SoFi platform. The way to think about SoFi's business is to think about it as an aggregator of demand. This is much more like an internet company than it is like a traditional bank. So you want to have the SoFi app be the place that you go for all your financial needs. So whether you're investing, you're buying or selling cryptocurrencies, you're making transactions, all of those things SoFi wants you to do on their platform. That's why the number of users of the SoFi app is really going to be the key indicator of growth. The number of products also growing extremely quickly, over 50% compounded annual growth rate, now 18.6 million. I'd actually like to see this grow a little bit faster, but at least users are using at least one product, and there's a little bit of momentum in getting them to use more than one product over time. Here's really the strategy for SoFi as a business. You want to have members, and then you want them using their banking services, credit cards, investing, loans. All of these things make it a one-stop shop. Very similar strategy for what you have with Robinhood, but that's starting with investing instead of starting with banking. But that's why I own both of these companies. They're digital-first companies, so the economics should be much better than we see with traditional banks. And that is what we see with financial services. This is really the growth driver for SoFi right now. So this is everything from credit cards to investing, cryptocurrencies, all those things fall in here, and you can see that the growth rate, 76% net revenue growth rate year over year, is absolutely phenomenal. The contribution margin is also increasing, now a 54% contribution margin rate. The other thing that falls under the financial services business is actually the fees that come from their loan platform business. So one of the things that SoFi has done to reduce the risk on their balance sheet is say, you know what, we're going to originate the loan. So the customer will come in, ask for a loan from us, but then we're going to sell that loan immediately to some of our financing partners. So they're just the origination medium, and then they get a fee for that, but they're not taking on the financial risk of the loan itself. So from the customer's perspective, it looks like you're taking out a loan from SoFi, but from SoFi's balance sheet, it's not the same burden as you have with a traditional bank on the balance sheet. So it makes it much more of a fee-based business, and that actually falls into this business, financial services, not the loan business or the lending business. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The lending segment did grow though, so $481 million worth of adjusted revenue, contribution margin declining a little bit. This is where you're starting to see a little bit of weakness from a consumer. Management did talk about that on the conference call. This is a pretty good borrower base, so very high FICO scores. That is the kind of customers that SoFi is going to be seeking out. But something to keep an eye on. It's getting a little bit riskier as it seems like the economy gets a little bit worse for the average consumer. But here's where you see more growth in originations than you see growth from the lending revenue business. So you see originations now almost $20 billion for the first 3 quarters of the year. Student loans, not a huge business. This is one thing management thinks that, hey, if interest rates keep coming down, this will get to be a little bit more. Home loans coming off of a big year in 2021. This was during the pandemic, you remember, and things were down, but now they're starting to gain a little bit of market share in the home loans business. So that's going to be a really big market that they basically have very, very little market share. Technology platform is one area where I think there's more opportunity ahead, but it takes a long time to get customers to use their technology platform. They did say that they had an airline that was going to be using them for some of their debit cards or credit cards. So they're starting to onboard some customers, but this is not the huge growth driver that you're going to get with financial services. I think that's actually okay. This is something where they can build this technology. The core SoFi app can actually use a lot of this technology. So this isn't going to necessarily be the growth driver. Will be incrementally positive for SoFi. I think the real way to think about the company and the stock is going to be, are people choosing to use the SoFi application? That's where you're going to drive your long-term value. And at the end of the day, what we want to see as investors is management increase their expectations for growth going forward. So this is their guidance for fiscal year 2025. 2025 prior guidance, so from a quarter ago, is on the right over here. The new guidance updated today is right here. So you can see that their implied annual growth rate is now up to 36%, just a phenomenal growth rate. Adjusted EBITDA expected to be over $1 billion. So that's about 29% from a year ago. Net income, $455 million. And diluted earnings per share, 37 cents. So this is still a pretty expensive stock. If you just look at things like earnings per share, PE ratio is in the high double digits, not quite 100 if you look at those earnings guidance, but not the cheapest stock. But the good news for investors is this is just a compounding machine, growing that revenue about 36% this year. Will be absolutely phenomenal. So investors are paying a high price for that. I don't know if I'm a buyer of shares here. $30 per share is pretty expensive, and my cost basis is much lower, but absolutely letting this ride because this is one of the phenomenal companies in technology today, really disrupting that banking space, and a lot of growth runway ahead with things that they're building on the blockchain using stable coins. They're going to be launching their own stable coins. I think there's some interesting things that they could do as an actual bank that's leaning into that, but we'll see how that's going to impact the business over the next few quarters. Let me know your thoughts on SoFi's quarter in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.